Everybody, wow, 23 people here already with 23 likes. That's absolutely fantastic. As we will be going over a lot of stuff today, a lot of stuff. And somebody mentioned it in the comments, and I appreciate it. We'll be talking about. I wanted to talk about it with anybody who's in the live in a little bit, but we're going to be talking about Pacific Island Group of Palau starts stablecoin trial on XRP Ledger. So that's something that's very, very interesting. So we have to get into that. Just give me a split second here to pull up all my stuff on YouTube just so I can see everybody who's on here. Just in case the chat, because as you can see, it's frozen up right now. There we go. Ben, thanks for joining Tom's Army. World, welcome in. Russell. Sardo, welcome in. Chat, welcome in. You got more XRP today, starting a second account on the dip. Hope we push. We should be able to. Chris Allard, long time no see. Well, welcome back, my friend. Welcome back. We're thrilled to have you back. Lewis, welcome in, my friend. Joshua, welcome in. Marvin, what's going on, my brother? So I think we're all set here. I've already got everything pulled up here. Yeah, everything's good. Wow, there's a lot of comments. Zam, welcome in. Czam, Marvin, XRP&D. Darren, welcome in, mate. Good evening. Glad to see you in here. One of my most trusted mods. Corey, welcome in. XRP to the moon. Chat, James, looking good. Thank you very much. I appreciate that. That guy Pie, finally able to make a live. What's good news? Do you think we have to test 7136 for a while now? We'll take a look at this. We'll take a look at the charts right now for sure. Make sure if you're watching to hit that like button, as it'll greatly help push me through the analytics. And I appreciate everybody tuning in. Man, chat's moving fast. Chat held 673 perfectly. It held it perfectly. Tanya, welcome in, love. Glad to see you in here. We'll see XDC during this live, Chris. I always show it. Rod Evening, welcome in. It's blazing hot there in Phoenix, Arizona. Well, I'm inside because it was raining. So, Prosperity Fund back to 65 to 67 cents. I don't know about that. We'll see. Levi Spencer, the great state of niche again. I still got to do my intro, believe it or not. That guy, welcome in. Darren Plum, welcome in. Glad to see you in here. Everything's going good here. Lee Tennant, welcome in. XRP Rich, welcome. Codazer, do we need to pass? It's about 738 and 78 cents. Yes, indeed. Corium's next to move out, committer. Well, watch Corium Concepts, homegrown from the community. Covers Corium very nicely. Joe Russin, welcome in. Must be nice, yes. So, this is what XRP did. We are in here. Indeed, we are. I love welcome in. XRP Broska, staying informed all day. That's what we got to do. White Lotus, in like... welcome in, my friend. So, as we can see in the 30-minute time frame, this is where a big explosion happened. It's a 1,500% rise in volume. We had about 200,000 to 300,000 for the 30-minute. No. Darren, I am not. Boom, boom, boom. I just, my face is looking a little bit better, but I just continue to work. I don't show what I'm dealing with. I just do work. You know, I do work. I'm healing every single day. I'm feeling better today than yesterday. Code is there, no problem about. Oh, but we're also going to be, we'll be doing a second installment today of Winners Wednesdays, and we started with the $75 purchase today of Algo, and we're going to do one more $75 purchase sometime during this live. And going forward, every Wednesday is Winners Wednesday, where we buy $75 a week in Algo until we get to 10,000 tokens, and I'll show you all in the pattern in a little bit why I chose today. As you know, we filled 10,000 H-bar in 9 weeks as a community, and now we have 2,500 Casper so far in the first $100 on FOMO Fridays. We were doing H-bar, but we filled up our bag. So, XRP, the important thing here is, you see the 30-minute time frame? We had 3.5 million. The importance of that is let's take it out to the 4-hourly and see what the volume in the 4-hourly was. So, prior to this candle, our volume 2.1. This was like a consolidatory candle before a breakup. But in the candles before this, when we were coming through, we had 6.3, 2.2, 3.2 now. And now consolidating 2.6, 2.23, 2.18. These are in the 4-hour time frames. So you're not even getting 5 million in the 4-hour time frame, or 4 million for the most part. Now, if we just go back into the 30-minute time frame, look at this nice little push there. 3.52 million. That outdid our 4-hour time frame for a very long stretch. And we already know how this is playing out. We measured the move out, and the underneath is just in case we came down to 65 cents. That technically can still line up in the 4-hour time frame as a bull flag. That's about as far down as you can go if you want to call this a bull flag. We were looking, however, for this horizontal support. Let me get my arrow out so everybody can see who's new. We were looking for the horizontal support here to form our double bottom. This is the swing low at 6738. Swing high is up here at 9371. Came to the swing low at 673. Came up here to the mid-tier push up where we got rejected to form a lower low. This is how you form a bull flag. And now we came back down to our horizontal support, which we were prophesizing the 673 before the dump down, saying if we were going to bounce out and have a parabolic spike, 673 is our best opportunity, but acknowledging it come down to 65 cents, overextending at a support area and still ride it out to the same area around here and break out in this area. And if it does, that's a 70% breakout with the proper signal. And right now, we have a W reversal. Looks like we're could form an inverted head and shoulders like we talked yesterday in the short time frame. If this double bottom is confirmed, and we need to first break 7.3, what is it, about 7.38, and then ultimately get over this 76 cents and break over the bull flag and hold it, this would, if this double bottom holds and it pushes up from here, the technical target's $1.15. Let's just put it that way. Your technical target's up there around $1.15. If it bounces out right here, it could be a little bit higher to like $1.17. But we're on the cusp of a major move. And not just that with XRP. John Hall, welcome in, my brother. I don't have many thoughts on Jasmine, honestly. Not today, BJ. We got a lot to talk about. I think Jasmine's a good project. You've been stacking Algo ZZAM. Excellent job. Tyson, H-Bar. I love H-Bar. Love H-Bar. Bams, welcome in. If anybody wants to show support for me, join Tom's Army. Or you can send a YouTube super chat during this live, but I don't do paid promotion, paid advertisements, or paid sponsorships of any kind because I want you to have a free viewing experience. None of my content's behind a firewall or a paywall. So that's what we're looking at with XRP. This 30-minute time frame has given us a huge signal. We had a huge signal or spike in volume. Now what we needed to see was our consolidator volume. Look at what happened. Reversal candle. We came down from 3.52, and then we consolidated at 1.03. Now the hold candle, 648,000. We started pushing down. Started pushing down again, 722, 252. Again, this is just like how we knew we were about to have a breakout earlier. We talked earlier about the bullish divergence that was going to happen on the price volume. And it's easier to see in the 4-hourly as we came down. And this is a lot. You can learn a lot here for free. You don't have to pay anything. No problem, BJ. I love Jasmine, though, on the down low. Quantwell, yep. Quantwell as well. How do I feel about XLM? XLM's the real deal, just like XRP. You have to have equal holdings in XRP, XLM, XTC. I have 12,222 in all three tokens. XLM's a sleeping giant. And we will show XLM during this live. It's going to be a very long live, I think. So, Casper, jump on. Yep. Yes, I love the ISO tokens. Thank you, Tanya. The ISO 20022 tokens and the Internet of Things tokens. I don't have many thoughts on CSC coin, to be honest with you. Trying to keep it laser focused tonight. So right now in the reversal candles, because as we know, in the weekly for XRP, we have a golden cross that form. First one since November of 2021, I believe. Was it 2021 or 20? No. Not 2021. November of 2020. Last time we had a golden cross in XRP. So I think right now we're looking a little strong. 2-hour time frame, we reversed back up. Did exactly what we needed to do. We held that short-term support to validate that our trend's not ready to reverse back down. We know we're on a bull flag. We put it out here before it happened. The beauty for us is we hit the horizontal support. That is such a huge bullish hold. Because the other thing I showed, if we did this, One thing that's not meeting the eyes, we keep building W's in this formation, but if this actually holds properly, horizontal support, double bottom, if this bounces out of here, you very well could see a pattern that ends up forming with a gigantic W out of here. I mean, this is very bullish if we continue now. If we do get a candle that would send us down, right now it's looking more bullish than bearish. I'm asking for a God candle. That 30-minute isn't exactly a God candle, but it would wake you up. That woke everybody up. Everybody said, uh-oh, what's going on here with XRP? So this is a very important 2-hour candle as well. I want to see the close at 8 o'clock. So very important for XRP. We also had some big news today as well, as Pacific Island Group of Palau start stablecoin trial on XRP Ledger. So the country has been distributing PSC, Palau stablecoin, for 3 weeks, and the test will run through August. So Palau is a country comprising some 340 islands in the Pacific Ocean, is running a trial of stablecoin linked to the U.S. dollar. Jay Hunter, a member of the board of directors at the Ministry of Finance, told CoinDesk in a direct message, the project started in March with Walt Design, so it's on the XRP Ledger, yada, yada, yada. There's no guarantee the nation of 20,000 people, which does not have a central bank and uses U.S. dollar as its currency, will continue with the project once the test is over. We will okay, so that's just what's starting today. So it's a U.S.-backed stablecoin project, but it's piloted on the XRP Ledger. So that's the big deal here. It's on the XRP Ledger, and I don't want to focus too much on that, but I just wanted to give you the information. I'll share this article in like a 3-minute update after the live, just so everybody can listen to me read the whole thing. But that's going on. But now I want to talk about the FOMC meeting. Now that we see the volume, I want to show you guys some other good news. Like I said, a lot of people are going to try to get you to sell your XRP for a while. I felt like this was a bear trap. It looks like it's setting up for us, but we have to let it play through. Let it play out of this bull flag if it's going to play true. So just pay attention. Crypto Scrooge, welcome in. That's Crypto Solo Scrooge on YouTube. He's up over 510 subscribers now, homegrown from the community and doing a fantastic job if you want to watch him. So for anybody who hasn't seen this, we're going to watch this together. So I appreciate everybody tuning in. We have, holy crap, 146 people in here. Only 80 likes. Make sure to hit that like button, as that will really help push me through the analytics. And that is the first sign that people will come in and be like, okay, everybody's enjoying what this guy's talking about. He must know what he's talking about. Everybody's hitting the like button. Unless you want to send a YouTube super chat or join Tom's Army, you can always do that in lieu of hitting the like button. But I find it much easier for you, just hit the like button. So we're going to go through this together, though. No, Saudi. That doesn't mean our portfolio is going up 150 or 1,500%. The volume portfolio in the 30-minute time frame jumped by 1,500%. That's signifying we could have a pattern of a nice little push up here. If we can get a follow through, which we're starting to have with the correlation correction here, we want to not have a big volume spike on the way down, and we're not. It's dumped off. This is going to be a bullish divergence here, just like before. That's what I was going to show. But this 1,500% spike, you have 3.5 million in this 30-minute candle. Most of these candles were 200 or 150,000 at best. We had some 300 or 400,000, one 700. We even had some under 100,000. Look how low these are. So then we go into the 4-hour time frame. And this morning I did an update and I showed we were having a bullish divergence here on price, on the price action, and eventually, or the price compared to volume, and eventually we were going to break out. This was going to have a bullish divergence here. So let me go into the daily. It's probably easier to see. But there's just so many people talking that it's, yeah, this is much easier to see. So this is a bear, this ends up, I don't even know how high that goes. But we can use it from right there. So, I mean, this was playing out like this. The volume, you can even extend it out if you want, but the volume is playing off in a bearish or a bullish divergence. That means the volume's crashing while the price is crashing. On the way up, we did exactly what you want. Wow, Darren Plum, thank you so much for joining Tom's Army. That is so awesome. You've just made my night. Thank you so much. Messy, the 4-hour time frame looks like Bitcoin Weekly from 2021 November. Interesting. Marvin, when will the dollar be broke? That's debatable because they always like to overinflate the dollar. Miss Vicky, welcome in, love. Hey, Tom, I'm here. Yeah, Tom, I think I'm too inexperienced to be a mod. I can be a student, but will always support you and your army. Love you, Tom. That's okay. Here, watch. I'll take the pressure off of you. There, Miss Vicky, I took the mod pressure off of you. No problem at all. But I do know somebody who's in the house that can take that pressure from you. That would be Lewis. Lewis, you're going to be my new mod because we're growing, so I need to make a mod every so often. Lewis, you've been in for... Heck, you're Lewis. Everybody knows Lewis. Lewis! You're a mod now. No, you didn't, Miss Vicky. It was not a mistake. It's okay. It's okay, but Lewis has been in here too for a long time, so everything happens for a reason. Everything happens for a reason. What was that? $25 donation. Tom, great job growing your channel. Really enjoy your work. Everyone hit the like button. Wow. Wow. Thank you so much. I greatly appreciate that. A $25 donation. I can't even believe that. Can't even believe that. That is incredibly generous of you to spend your hard-earned money. Thank you so much. So with XRP, we had that divergence in price action. Let me, So the price action, that's a bullish divergence for us. So let's break this back down. So when this was happening on the way up, no problem, Miss Vicky. We handle it very easily and smoothly around here with positivity. So on the push up, big increases in volume. 202 million. Even on this one, 172. That was supporting a push up. Now we consolidated back up. And now we had our liquidity pull. We dumped about 30%, a little bit over 30%. And now we came back down to the 673. Well, look at the volume. That crashed. That's going to create a bullish divergence in volume once we get what I was calling a God candle or a big spike in volume. Lewis. Thank you, Lewis, so much. Welcome in, my friend. A new mod in the house. New mod. It could break out in 2 to 3 days, Musty. It's very possible. But now, because we're being supported on the lack of volume, it looks like we want to reverse up. And if we do, we got a beautiful consolidation. We hit a double bottom. We did it at the swing low. And now we're trying to support it with the volume breakout. We finally got it in the 30-minute time frame. We broke out by 1,500% in volume over the previous like 30-minute candles. All the way in here, this was a 15% increase from when we were consolidating. Once we started consolidating here, it's a 1,500% increase. It increased by 15 times the volume. It was basically coming in, to be honest with you, it was coming in at about 200 to 300,000 per 30 minutes, about 3 to 4 million in the 4-hour time frame. That came in at 3.52 million in 30 minutes. So now you go to the 4-hour to just to validate what we're saying. You had 1.97, 2.1. This one had 7.75. But that is the 4-hourly once we had to move. Look back here, 2.18, 2.23, 2.62. We had twice as much volume on over 60% more volume for the most part. Look, none of these candles are even as big until you go back here. 4.6, 6.3. Ever since here, you don't even have a 4-hour candle that was as big as the 30-minute volume outbreak. That should put it in perspective. That's a 4-hour candle that was giving you 2.259, 3.23, 1.97, 2.23, 2.18. And then we started to get some volume fluxing in when we started pushing up. So the last one was 2.18. Now look at the 30-minute volume. This is how you can signal if you're starting to have a big outbreak that could possibly happen. We have to see if we have follow through. But all of a sudden here we got 3.52. Even here, 930,000 told us something. Right here is 3.52 million. And then this candle right here is about a million. 1 million. Now we're consolidating. You want to see it decreasing. 648,000, 722, 252,000. This one's 667, but it looks like it could reverse. This is fighting with itself to be a reversal candle. So very, 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 very interesting times here. Make sure to hit that like button. 116 likes. We have 165 people in here. Thank you so much. I think we broke a record today. Our old high was 165. I know I seen 167. So thank you so much. Make sure you hit that like button. So that's XRP. XLM, it's not that it's pumping and XRP isn't. XRP made that beautiful W reversal. And now it's just getting the push. It's not because XRP's not. Let me go into the I think that's the right chart. Oh yeah, I forgot I kept it on the breakout. I thought I had a different XLM chart too. That's so low. I guess we'll have to remake it. But that was our breakout on XLM. I had this drawn out for XLM with like 3 different layers. I must deleted the chart on accident. But XLM, here, let me make this easier for everybody. You guys all remember the chart. I don't know what I did to it. Somehow I deleted it. So we hit the swing high up here. That was our technical target on the breakout of the long-term pattern formation. And we technically broke out and hit it. Now you can see we haven't came to the top yet. All we're doing is trying to fulfill this bull flag. It's not that XRP hasn't moved. It's just, it's running slightly opposite. And I don't even really think it came all the way down. It actually broke back up. So that's kind of, that's pretty much what XLM's looking like right now until it breaks out. And XLM can have a massive move on the way up as well. If it broke out of here and it, because you can take this measured move up and use that because that's how high the bull flag was. It's actually being a little conservative. But you could theoretically have a breakout, and like I've been talking to, about 22 cents. 22.4 with XLM. That would be the top end. That'd be the top end if we were to break out. So that's what I'd be looking at for XLM. I'm not going to spend a lot of time on XLM tonight because we gotta watch the FOMC meeting, everybody. So that's XLM. And then XDC just for so you can see because it's moving. We've broken out of what looks like a broadening wedge right now with XDC. If we can hold it, now we know it's not that. It's actually the broadening wedge. And we were theorizing this, but now it's over the top. So now let's get this out of the way. Let's get this out of the way. Let's get this into the 30-minute. Where are we at right now? What is it? 6? Oh, it's down to 591. So XLM, if it wants to break out, XLM needs to get on top of the broadening wedge, the short-term broadening wedge at 649. Or for XDC, that's where it's trying to get above. So if you're looking at XDC, 649. 649. No, 652, say. 652 would have to break and hold for XDC. DGB, for anybody who's a fan, DGB's having a moment right now, as we talked about. It had a golden cross here in the shorter time frames again. Yesterday, we broke this pattern down very beautifully, and it's on the breakout attempt for DGB. It really is. It had a long-term downtrend, and it's on the top side. And now the technical target would be somewhere in here if it can do this properly. It's consolidating perfectly, and it's about to bounce off the 742 and use that as support like it has so far. So, and I love DGB. It's my baby. So I have 62,222 tokens at 0061, I believe it is. H-bar, since somebody asked. If you appreciate my work, hit that like button. We have 156 people in here. Wow. 129 likes. Make sure to hit that like button. I would greatly appreciate that. With H-bar, as you know, we finished off on FOMO Fridays on H-bar. And we'll get into the FOMC meeting just here in a second, folks. We're going to do our weekly purchase as well for Winners Wednesday. Anybody who's here, who's interested in Winners Wednesday that started today? We did our first $75 purchase earlier, but now I want to do one live on air for algo. We're buying $75 a week, and I'll show you in the pattern why. We already do FOMO Fridays, which over 9 weeks we were able to buy 10,000 tokens of H-bar for about $527 over 9 weeks. And then we were able so far to spend $100 on Casper, CSPR, and build into it. And right now we have 2,500 plus tokens for $100. And now that's going to continue on FOMO Fridays for $50 a week. But now we're also going to do on Wednesdays, Winners Wednesdays, because we have to have a positive mindset. We're winners in here, we don't play the victim. And we're going to build our algo position, as I love the ISO tokens and the Internet of Things tokens. So if anybody wants to join me in that, it's $75 a week. Today we're just having a big explosive buy of $150 total. So we'll be doing that. So Crypto Screws, I'm so happy you're involved. So happy you're involved. Love it. So this is H-bar. We got this inverted head and shoulders pattern that formed. As long as it bounces above the roughly 497, this will form, and we're going to be looking for a move up to about 6.5. My son's bouncing on his trampoline right now. My 4-year-old with Mama, and the 9-year-old's out here, Scarlett. So the whole gang's here. The 16-year-old's in the room. Michaela.
I found a firefly.
Anyone know what's happening with the crypto bill? Yeah, we can talk about the crypto bill because actually I can get that for you because I was actually looking at that earlier. It got passed. Well, not passed, but it's going to move through legislation now because the Democrats and Republicans were split, but it's going to the congressional committee vote. So the crypto bill is to face congressional committee vote. We can talk about that in a little bit as well. So like I said, this will probably be a little bit longer than usual because we have to go to the FOMC meeting. Julie is fully understanding when I do this. So 136 likes now. Thank you so much for hitting that like button. So this is H-bar. So make sure we're going into the algo chart right after this, Emerson. Right after this. So this is H-bar. So pay attention. Little W reversal looks like it could be starting as well. So let's just see if that plays out. With algo, I have a beautiful rendition of algo as well. When I own something or when I show everybody, I like to have it charted out very, very transparently, very easy to read. So algo is in this descending triangle formation. So I broke it down into the smaller time frame. It's in a much bigger formation, but I broke it down into here. I looked for a very nice descending formation. We got into it now for algo. The reason I like this formation is because it could very well wind us down to the 2.7 cents. So we'll buy $75 a week as this formation is finishing out. I still think it could come down farther because it's creating an inverted head and shoulders either at this level or farther down. But we don't know when it's going to break out. So I think this is a perfect level to start buying $75 a week. So that's what we're doing here. So that's what's going on with algo. So that's the chart with algo. I'm on Twitter, but it's XRP Future 222. I just put my stuff out when I go live and whatnot. So again, one more thing with XRP. XRP with this volume surge, ladies and gentlemen, that's a 1,500% surge in volume. So that we have to pay attention to very, very closely. That could be the catalyst along with what's happening if we can hold this to have a further push up. Hello, Tommy, high five. To have a further push up. But, and this is where it happened. We got 3.52 million in the 30-minute volume. And we were only getting about 2 to 3 million in the 4-hour time frame before that. So what I want to do now is I want to watch the FOMC meeting with everybody like I promised. As you know, we got a 25 basis point rate hike. The markets have my son walked behind me. But the markets have baked this in, I believe.
It's cute.
So it could ensue a rally in risk on assets and cryptocurrency. So let's start watching this and we'll unpack this together. Thank you everybody for tuning in. I greatly appreciate it. Make sure to hit that like button and we will watch this together.
Inflation. When I started Hexclad Cookware, prices for the American people. remains squarely focused.
Come on, Jerome. All right, here comes the criminal gangster.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Exciting times indeed, Lee. Yes.
Since early last year, the FOMC has significant...
Yes, Darren, that's a huge thing that's going to happen on the 22nd of next month. That's going to be the first step of us losing our world reserve currency in the U.S.
tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 0.25 percentage point, and we are continuing to reduce...
And real quick, for anybody who doesn't understand, so the Fed bailed out banks, and like Silicon Valley Bank and such, so they put a lot of money in, over $1 trillion or $2 trillion. So now, by raising rates again by a 0.25 basis points, that would be like you taking out a loan for your house and going in the next month and saying, oh, I know I got a 5% interest rate, but now it's going to be 5.25% going forward. So now they got to pay an extra 0.25 percentage point, which means me and you have to pay more money. Our taxes go up. The Fed's not paying this. We are through inflation.
Our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago.
Yeah, Lee, I seen they went up 50 basis points. I knew the U.S. had to do at least 25, but I think we could be doing a pause after this. That's the big thing. He's talking hawkish. Listen to him talk hawkish in the beginning, but he certainly goes dovish after. So let's just keep listening.
Largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose.
Well, Massey, we got to get to the end. We're just going through it right now.
4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We're also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by...
And that's exactly what I predicted and came out and said. A catalyst for XRP to possibly bounce out. It could be the catalyst for us to bounce out and get a good volume, get a God candle, or something that could switch this buying portfolios. It's going to be a 25 base point rate hike. I was confident in that. So I said it this morning in the update. And they have no choice. They really need to go 100 or 200 or 300 basis points, and that's not a joke. But they can't do anything. They're hamstrung. They bailed the banks out. Once they bailed the banks out, this is the safe face here, this move. This move is purely the safe face. They basically raised rates on themselves. They took out a loan for over $1 trillion to bail out the banks, and now they raised it another quarter percentage point. They have to pay it back. They're already broke. We're like $32 trillion in debt. I mean, so now they got to pay another quarter percentage point on 32 trillion. That's what it means. A lot of people think when they could make $50,000 a year, they want to make 100. But if the interest rate is at, if interest is at 5.5%, like it is now, it went from 5.25 to 5.5 instead of 1%, you have less purchasing power. Your money can be worth more, even though you make less. You want to make $20,000 a year with as close to 0% interest as possible. You don't want $50,000 at 5.25 or 5.5. When that's not even the real interest rate. In stores, it's somewhere around 13 to 15%. So we're not even on par with the 5.5% right now for the basis point increases. Now we're up to 5.5%. We're almost 2.5 times higher than that in real inflation. It doesn't average out. We're $32 trillion in debt. Can only end one way.
5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh.
Exactly, Darren, kicking the can up the road. If they kick it up the road any farther, we're going into full-fledged hyperinflation, and crypto and precious metals go hand in hand in this next turn.
On economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is...
Absolutely, Lee. Very important to have water, organic foods, Lewis. Absolutely. Me and Julie have been paying a lot more for our meats lately because it's like, I don't even know, $7, $8 a pound more to get it without antibiotics and to make sure you're actually, hopefully, getting what you're paying for. But you know how it goes.
Likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
My name is Tyler Depp.
And price stability.
Wow, that was real short. That was his press conference today. He said a lot of nothing.
Goals. Thank you, and I look forward to your questions.
Steve.
All right, now all the puppets raised their hand, but he said a lot of nothing. He literally said a lot of nothing there. So, I mean, that wasn't very hawkish. He basically is telling us they're getting ready they're going to ease. He's telling us we're going back into quantitative easing before we know it. That's exactly what he's telling us right now. Let's hear the questions. Let's see these telegraph questions.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks talked about this language
Right, he does look forward to winning their questions. Good comment.
in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting?
Thank you, Darren.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each
Guys,
meeting,
that's a
we're
joke.
going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading. But we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture. And starting with, we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward.
I mean, you would think that this guy has no affiliation. Like, he is the chairman. As the chairman, he's always deferring, always saying we got to go into, like, you're the chairman. Give an honest answer. Like, this guy sounds so stupid all the time. Like, you are the chairman. Like, you don't have to do any case research or research any papers or get any kind of case study. You're the chairman. We don't care what everything says. We don't need you to come to a consensus. Just tell us something.
Potentially, but we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get
ridiculous.
two more
This
job
guy's
reports, two more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index. And lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now.
And that's FEMX in the video description below. A lot of people ask. No VPN there. You can buy XRP in the USA, your favorite crypto. And you don't need to do any kind of KYC unless you're depositing money on the exchange. You can buy a bank account or buy your credit or debit cards. But if you're sending it from another exchange, I only share that because we need as many on-off ramps as possible. When it went down on Uphold and we had a 94% spike, they were not down. So I keep empty dry powder on there just in case, and then I can ship it back over to Uphold or whatever I decide to do. So make sure you can take advantage of the market when it's going down. If you're just sending money off of another exchange, you don't need to do a KYC, and you can do 50,000 a day. Just make sure you have that. I have that and Uphold, BitGet, and MEX, see if you can still use it, but they don't allow new users. You can still use it in the USA if you're already a user, but we're trying to figure out as many as possible that are Web3. Uphold's Web3, FEMX is Web3, and they both have our tax code. You get 1099 on FEMX and Uphold. That's why I like them the most.
525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said.
It's always so generic, Matt. The other thing is, if we were in the audience asking questions, I mean, listen to these questions. They're pointless.
That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And you know, we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
That's what I'm saying. He always says, yeah, exactly. That's what he always says about the data. What? Why does he need to see data? He's the chairman. I mean, that's like me trying to run my station and say, let me see data. I need to see data how to do the next update or how to tell you what's going to happen next on the chart. You should already know the data. You're the chairman.
Gina.
Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. You know, we've seen the Barbie movie number.
Good evening, Sean, my main man from Maine. Hopefully you're doing good, my friend.
We've seen everyone going to Taylor Swift concerts this summer. It seems
Yeah,
like the
Sean
American
Crowther's
consumer is
exactly
in pretty good
doing.
shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder from your perspective, if that continues, if we see growth not just stabilizing, but doing,
He does.
you know, performing well this summer, is that a problem because it's inflationary, or is it good news
He's a par-
because it suggests that a soft landing is more likely? Just how are you thinking about
That was
sort of
impressive,
trajectory?
Julie.
Yeah. So
Sean, for the record, when I said Sean, welcome in, Julie said Sean Crowther, so she remembered who you were. So isn't that kind of cool, Sean?
I would say it this way: the overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy overall.
Awesome,
That's a
Sean.
good thing. It's good to see.
He heard you,
of course.
Julie.
It's also you see
Yeah.
consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Sean, her ankle's doing okay, but she is going to have the fifth surgery. They're going to try to remove the hardware and see if that helps a little bit. But she's doing okay. Just she deals with a lot of swelling every day at the end of the day, especially.
Neil.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS look good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
We can't.
If you go back to
hard pivot to a piece of
if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting,
Indeed,
we
Sean,
wrote down
indeed.
our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So
Good job, Andrew. And now, obviously, you have some funds to deal with. So, what I always tell everybody, you bought 7,000. If you're not looking to buy any more, just make sure you have dry powder if it ever goes 20% below that, and you start balancing out. Brings your average down in half every single dime.
I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent
Exactly,
with expectations.
man.
And as a result, we went ahead and took another step. And that's a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading. And growth.
Oh, yeah,
came
it
in
was
stronger
so
than
good.
expected.
It's great growth.
That's how we look at it, and so we did take that step today.
Nick.
100%, Sean. When are we buying again here, Sean, as
Tim
well
Rose of the Wall
tonight?
Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation...
Wow, thank you, everybody. 157 people in here, 166 likes. I cannot thank you enough. Thank you so much. And for anybody who wants to participate in Winners Wednesdays, we're doing a $75 purchase every Wednesday. We'll be doing that after the FOMC meeting, after we get done watching it. We'll be doing our second $75 purchase here with Algo. That's what we're starting with Winners Wednesday, and on FOMO Fridays, we're continuing with Casper. We just filled last week 10,000 tokens of HBAR over 9 weeks. Cost us $527.
Should progress be enough to hold rates steady from here, or do you need to see below trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, we'll be looking to see
Hello,
whether
Billionaire
the
Faith.
signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality
That
of
good
the
old data.
I think, but with a particular focus on making.
Billionaire Faith, welcome in, love. Always good to see you in here. 40/50 Fitness, it is looking good. I don't know a lot about G-Box. It's a good question, though. That's a good question. This guy must have the holy grail of data. Like, can I see the data, please? He's been talking about the data since 2017. Well, let's be fair, since 2021.
Progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you...
Andrew, yes, 9,000 should be solid. I hold the 10,000 tokens for everything, so I have just a little more XRP than you, 12,222 tokens. But like for me, it depends what your interpretation is. Like I have 62,222 DGB, 12,222 XRP, XLM, XDC, 22,222 Zillion V chain, 10,057 HBAR, 2,500 so far Casper, what we're building every Friday, $50 a week in FOMO Fridays. Only 668 Algo, but we're building every Tuesday or Wednesday on Winners Wednesday. We'll be doing a $75 purchase today to add on. Trying to get to 10,000. I'm a very big fan of the ISO 20022 compliance tokens and the Internet of Things tokens. And everything that I bought, I sold out in 2021 when XRP was at $1.66. Didn't buy back into crypto for a year and a half for anybody who's new. And then we bought it back late 22 and the rest in 2023 when they were up to 90%. Some, in this case with Algo, 96% off. Some up to 99% off. In DGB's case, we bought it for 99% less than we sold it for. So this is how we do it. And we bought precious metals when they were down. We built our silver stack, so it's been a beautiful thing. Now let's continue.
That second rate hike.
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is
Yes,
the
sir,
overall signal
Andrew.
one
Yes,
that
sir.
we need to do more, that we need to tighten further. And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Oh yeah, and I forgot, via Julie, we hold this in Julie's account. We have 10,500 plus tokens of Doge. Huh? Oh yeah, 10,100 Doge. So we also have 10,000 tokens of Doge, but she bought Doge when it like $50 worth back when it was a bunch of zeros. And we rebought back in after she sold it on the Saturday Night Live debacle. She sold it during that run up, and we bought it back at 6.5 cents.
I sold it. Chris.
What?
Hi, Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices
Only
now,
50 of Shiba
after
so
trailing them
far.
for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates
Yeah, I only have $50 of Shiba. We bought $50 of Shiba one time at 0.0000000, wherever it's at with a 7. We did it one time, but that's something we would like to build as well. But we got to get Algo and Casper out of the way first.
strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, well, your question was?
Well, I mean, you've talked.
I mean, look, he talked in circles so much, Jerome Powell forgot what the actual question was. He answered in such a circle, he could not, see, this is, makes your head want to blow up.
For many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far.
You cannot.
And most economists think that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's
on FOMO Fridays, we're buying Casper on Uphold.
we think that's core is signaling where headline's going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period,
I think one day we'll see Sherman again. That was my little like lobster-looking thing that I had or snail that I used to have on an intro, but I couldn't do it anymore after I became partner because it got copyrighted.
where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
Does saving over $350,000 in potential taxes sound good to you in retirement? I'm going to show you how quickly we can get that.
We really need to avoid and will avoid.
Good, Michael and Keith.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base.
Okay, everybody, we're only going to watch a couple more minutes of this. I've already heard enough. We're just going to get no answers here. So I'm going to listen to this follow through on this question. Then we're going to go back into the charts because I've heard everything I need to hear here.
Effects and higher energy costs, and now we have some large labor settlements, or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market.
Blair should be
All of
okay
that
as
should
time
lead
goes
to
on.
declining inflationary pressures. And what we see is we see those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more.
Okay, well, I'm going to keep watching it. You know me, I'm boring. So I'm going to watch this because I need to know everything, and so should you. So we'll watch this as boring as it is. I know a lot of people will leave, but you know what? We got to have all the information. But at least I'll get the restrictive question. Finally, somebody asked it.
And if it does tell us that, collectively, if that's our view, then we will do more.
Colby.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that. And I think it'll sort itself out.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect.
Fletcher, welcome in, my friend. I need to talk to you in private about my Coinbase account that I can't access because my email got hacked. Andrew, I've never had Coinbase. I would be zero help with that. Is there anybody who has Coinbase that can help with that? I've never used Coinbase. I don't like them. So I have no knowledge of anything Coinbase related, unfortunately.
Economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restricted until we think it's not appropriate to do so. So that's how I think about it. I mean, if I sum it up, I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has proved
Oh, that's a
repeatedly
shame, Andrew.
stronger
Thanks
than
for
we
keeping
and
us
other
updated with that.
forecasters have expected. And at some point that may change. We have to be
He
ready
sure
to
does,
follow the
Cobb.
data. And given how far we've come, we can afford to be a little patient as well as resolute as we let this
That's a
unfold.
shame by Coinbase.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and below, heading below zero, which is usually a recession indicator.
Yep.
I guess the
Indeed,
SLOOS
Clyde.
will come out early next week. And I would just say it's broadly consistent with what you would expect. You've got
So, yes, next week there's earnings. We've got a few things coming out in like the next 10 days. And then we got, I believe, one more rate hike possibility before the end of the year. But this is sounding more and more like they're about to pause this full on and go back to quantitative easing. That means that risk assets, that means crypto is going to pump. Gold and silver will start exploding through precious metals. Oil is going to end up being a hot commodity. Grocery store is going to cost a lot more to go into. Our dollar is going to devalue. I mean, if this is what's going to happen, we're going into full-on hyperinflation coming up in probably a year and a half, 2 years in 2025.
lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
This free muscle stimulator.
Lending condition.
Honestly, I don't even know what glint is, Russell. So I could not. I don't know what that is.
And that's what this SLOOS will say.
Rachel.
Not bad,
Hey, Chair Powell,
Andrew.
Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. So.
Well, let me think of some
Question.
bullshit to tell you.
Let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods. Take autos as an example. The combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply. but there's also a role for demand as, you know, the loans and things like that are more.
Oh, I'm not surprised. YouTube has so many problems after a while. Once you get going in on a stream for some length of time, it's pretty interesting.
So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market. You know, I would say monetary policy is working about as we expect, and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very, very important factor. So we think both of those sources of disinflation are playing an important role.
See, and just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector. Important, particularly in the sector, in the non-housing services sector.
XDC is a real.
Thank you, Chair. Well, first, let me compliment your tie, the choice of tie. So thanks for taking our question. So the Beige Book, it said, input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation without pushing the economy into recession?
Well, I think that as it relates to goods, it's really an indication that supply chains and shortages are easing. And so what was the first part of it?
So wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's what we're seeing. So wages have actually been.
I have 12,222 tokens of XRP, XLM, and XDC.
Gradually moving down. They're still at levels that would be consistent over a long period of time with 2% inflation. Nonetheless, we're making progress there. And by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the establishment survey has, it's still at a high level, but it was at really an extraordinarily high level for most of the last 2 years. So you see cooling, particularly in private sector in the last, in the last report. So I think we see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the common thing is they come out with agreements like big pay increases like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job, not our role. We monitor these things and we'll keep an eye on them. But really, that's something that's handled at that level. And
Victoria. Oh crap! Are you guys still here? What just happened?
Victoria.
Why does it keep shutting it off? Huh.
Victoria.
Hi, Victoria Guido with Politico.
Hold on, everybody. I'm trying to get this into my case. Hold on one sec. As you know, my hands are not all that great right now, so I'm trying to get this in my case. I apologize. I moved outside. But the last thing I'd want to do is break my tablet outside. So let me just get this in the case. Whoops. Sorry about that. Apologize.
With Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates? Or is the speed at which inflation is falling also important?
I think you take both into account. I think you take everything into account when you start cutting rates. It would depend on a wide range of things. And when people...
Yeah, let's see. Well, I'm sorry, but I had to put it inside of my case. That's why I was saying, give me just a second. I apologize.
Writing down rate cuts next year, you know, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, you know, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there.
Thank you, Miss Vicky.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying.
Plus, I needed to come out to smoke some cannabis. Sore and listening to this guy, it makes your head spin.
We'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, you know, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2% goal.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for a recession. And I'm wondering if the staff has changed its view on the likelihood of recession being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
So it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view. And I think, you know, that's sort of consistent with
Digital, the great state of Michigan.
What I see today. So, but it's a long way from assured, and you know we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we as FOMC participants produce. Having an independent staff forecast as well as the individual.
Yes, it's been, it was legal for medical purposes starting in 2009, 2010. It's been fully legal in the state of Michigan for all citizens for the last probably 7 years now. 6 or 7 years fully legal.
Participant forecast is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us make, informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say, though, that there's a pathway. And yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say the historical record suggests that there's very likely to be some softening in labor market conditions, and consistent with having a soft landing, you would have some softening in labor market conditions. And that.
All right, we'll finish this in just a sec. We got 15 minutes. I want to see what XRP's doing real quick. I want to see what XDC's doing. as it's up 10.2% here. XDC is very volatile though, so it can have very quick moves up. But we've got XDC charted out very well. We knew it was attempting to break out of the broadening wedge. So XDC is looking for a hold here at 647 now. If it can get back up all the way. But it's got a little bit of a ways, or not 647. What is it, 64? It's stuck on here though. I don't know what's going on here. It's moving a little bit though. It keeps consolidating in this little range. So we'll see how XDC ends up finishing off here. We'll see how it finishes off. And then XRP, as we know, XRP in the 30-minute time frame got a beautiful candle, but now it's consolidating. So we need it to hold this consolidation. And right now, we don't have a lot of volume. Like I said, we want to see this continue to have a decrease in volume on the way down as it's consolidating, and that's what's happening. So right now, we'd like to see XRP start bouncing. We're trying to hold the 20-day here. So this is a typical retrace because we're about to have a golden cross confirming a short-term pattern reversal. So this would be our first step to hold that 712. So right now, we came down there, and now we bounced back up to 7144, 715 area, depending on which chart you're on. So that's a good sign. XRP in the 30-minute, as you can see, the breakout volume was 1,500% greater than this consolidatory candles. In the 4-hour time frame, to put it in perspective, if you're new, we were getting between, on this consolidation phase after this push up, on these consolidatory candles, 2.25, 3.23, 1.97, 2.6, 2.18. Now, if we go into the 30-minute candle, on this breakout volume, we had 3.52 million in just that 30-minute candle. Now we're consolidating here, but the volume's decreasing. 648, 722, 252, 679, 379. This one has 1 million, and that was a breakdown in this 30-minute candle. We came down to 7.1. What did we come down to exactly? 7.12 area. And now we've bounced back. Now we're pretty close to where we dropped down to. So we'll see if we continue down or if we do hold the 20-day and this short-term trend reversal actually does happen. The 45-minute, we're doing the same thing. We've had the bullish cross here. The 2-hour time frame, we're holding the support here. It looks like a bull flag in the 2-hourly. Could still drop down a tiny bit. But the volume's doing exactly what we want it to do to have this correction. It really is. In Bitcoin, Bitcoin remains over its 29,192 do or die level. Still looks like a bull flag. Came down on the broadening wedge. And it could be creating that inverted head like we talked about. So these patterns are not dead by a long shot, ladies and gentlemen. In fact, with what we're hearing, it looks more than likely than not that these could actually continue forward here. So we'll see what XRP does. Those are great looking candles here. We didn't hardly give anything back. For Bitcoin there, you can see there. But for XRP, the same thing. XRP's trying. It's trying right now. So it's interesting. It's interesting. As it's, I don't even know if it's raining. It's raining a little bit, but it's not really hitting me because of the tree. And then XLM was having a little bit of a move before the close. XLM, like XDC, is trying to take off. This looks like a bull flag as well. All of these look like they're on bull flags. For this to get out of the bull flag here, this needs to break out for XDC over, or XLM over 16.5. If it consolidates out and the breakout point happened around 14.7, the targeted move would be 22. If it came up here and broke out, it would be closer to 24 cents, likely. So we'll see what happens, ladies and gentlemen. We'll see what happens here. I mean, we could be like, oh, the move's going to happen here. But who knows? Who knows where the breakout's going to be? So I just like to put it, whoops. I just like to have it at the sideways area, and I lowered that on accident. That was actually at 22 cents, as some of you know from earlier. It was like 22.5, close enough, 222. So that's what we'd be looking at on a breakout from this area with XLM. So, I mean, that's what I'm seeing. There's still 121 people here. This is the second time ever we hit over 200 likes in a live. Thank you so much for that. If you want to show support, you can always join Tom's Army, as that's the greatest gift of all, or send a YouTube super chat. But you just being here is the greatest gift of all. I want to do real quick, though. It is, but it's not hitting me right here for some reason. We're going to do our Algo $75 buy real quick for winning Wednesdays. Or winners... on winning Wednesdays. We're doing the $75 purchase. So if you're a fan of Algo, let's go to the Algo chart real quick. 1108, our goal is to have 10,000 tokens at the end of this. Algo's in a descending triangle formation. And yeah, I'm going to have to end this in a second if it continues to rain like this, because I'm going to have to shut this off. Okay, good. Go ahead. So I'm going to do it right now. So if you're a fan of Algo, please let me know if you're joining in. Right now we have 662 tokens, but I'm going to buy the second $75 purchase. And that will get us right now 657 tokens. Preview trade, confirm. Thank you, Miss Vicky. Thank you so much for sending love to Julie and the babies. I really appreciate that. So the purchase is in. We now have 1,319 Algo. As you can see, the purchase went through. So 657. So there's our Algo. So with the $150 today, roughly, or with the 150 we put in, we have 1,319 Algo. So we're going to be doing winning Wednesdays, and we're going to be buying Algo $75 a week until we get to 10,000 tokens. Same thing we did with H-Bar on FOMO Fridays, and what we're doing on FOMO Fridays with Casper. But it's urgent that we start to build our position in Algo, as it's down 96%. And I'd like to build it while it's in this descending triangle formation. If it breaks out, it breaks out. But I'm going to be building into it $75 a week. We have 150 now, but it's $75 a week into this position. And we'll continue to build until we hit 10,000 tokens. Remember, if you bought it at the 2021 high, or 2021 high in the bull run in November, it was $2.85. To buy 10,000 tokens, it would cost $28,000, $28,500. To buy 10,000 tokens today, it's $1,100. So I told everybody back then, I love Algo, but I can't buy it till it starts to break, comes back into the buying levels. So now with XRP, we're trying to break out of this zone. It looks like it put in a short-term bull flag. This looks like a great consolidation. It's a shakeout attempt. Like I said, you could even come down a little bit farther. That's like the 707 area. But yeah, John, have a good night. Darren, have a good night. Not John. Darren, have a good night, mate. Thank you, Miss Vicky, for buying Algo with me. I really appreciate that. Really appreciate that. So yeah, that's what we're looking at here for XRP. So, but yeah, this live, as you can tell, is gonna, I'm trying to give you all the information. We had the flip, and now this looks like a nice bull flag here. It really does. So let me play this boring guy again.
You would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with...
Okay, everybody, we're almost done here because, as you can see, lightning and whatever, but this guy is boring. Very boring. Hey, Darren, thank you for buying. I greatly appreciate that. I don't think either.
Inflation numbers coming down. How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So, in fact, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the
bottom right, it looks like kind of like a dollar sign. In the comments, there's a thing that looks like a dollar sign. Click on that, and it'll give you the option for the super chat. I greatly appreciate you asking. I really do.
federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make. I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until all the way back to 2 until
Never.
2025 or so.
You're never going to 2% again. I hate to break it to everybody, never. You will never get to 2%. Never get to 2%. We'll leave it at that with this dope. You're never getting to 2%, ever. It's never going to happen. We don't need to be lied to anymore. It's just never going to happen. So, I mean, with XRP, we're looking for some more volume to come in here. Right now, it looks to be breaking down in the immediate short term. So, hopefully, we'll be able to turn this back around. But right now, it's reversing in the short term. We're looking for, in the immediate short term, everybody, before I leave, the 738 to break. Our next level to get on top of, as we talked about, we had a little bit more room to come down. The 45 is right about the 708, but it's a little bit, it's right at the 1 hour cross right now. So 70, yeah, about where we're at. I'd say 707, but the 1 hour cross is what we're looking at firmly right now. And we're trying not to lose the 2 hour support. That's a bull flag still set up. This looks like a shakeout in the 2 hour. So we'll see what happens. You'll know it's more than a shakeout if XRP loses and holds the 707 roughly. And then starts coming down, and then ultimately we come down below the 200 day in the 2 hour. If you see us below the 687, it's a problem. But you can come down to the 687 now that you established a double bottom on 673. You very well could come down to form that inverted right arm like we talked about yesterday. The short term, remember the short term arm, and this is what we want. It's fine if this happens to come down here, but so boom, 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 and then it would come back down, reconfirm and break out. So basically, like this, head back down, create the arm, and then bounce out, and then you could have something like this. That could be what's happening. You don't need it. But that is likely what could be happening if it breaks down a little bit farther. So don't be scared if it goes to the 687. That would be standard operating procedure. It's already done enough. It's already done enough. We want it to hold there in the 2 hour, though, the 20 day. Really what I want to see is the 1 hour hold where it's crossing. So you get a nice shakeout candle down to like the 708, 707, and then work our way back up is what I want to see. So hopefully that keeps it transparent for everybody. I'm XRP Future Millionaire. Make sure you hit that like button if you want to join Tom's Army here, or leave a YouTube super chat. Now's the time, because I got to get going here. It's raining on me, and we've been on for a very long time. I thank everybody for liking 209 times and everybody who's still tuning in. I do greatly appreciate it, more than you know. Andrew Tyler, thank you so much. Andrew Tyler Kratz, thank you so much for the $20. That's crazy generous. Thank you so much, everybody, and have a good night. It's starting to storm behind me, and we've seen a little bit of lightning, so Julie's signaling me to come in. So it's time to go. Have a good night, everybody.